And here's your quick market update for this week. And it was a quiet one, but next week is going to be really big, and I'll have news on GDP, inflation, employment numbers, and these are all the things that the Fed is watching when they decide what to do next when it comes to interest rates. This week we got, more signs that the economy is slowing. Pepsi, who you probably know also owns Frito-Lay, they cut forward guidance, which is really just, Pepsi saying, we don't think sales are going to be as strong as we originally thought. And, they said it's because they're seeing weaker consumer spending. And when people start cutting back on snacks, it's often a red flag. Remember, recessions are not bad for interest rates or the housing market. Something else, domestic travel and tourism were down as well, with some airline execs even saying that the industry's already in a recession. Retail sales, though, were up last month, but that actually could have been because people rushing to buy things before new tariffs took effect, I should say. And that's really not expected to last. The Fed's Beige Book showed us the economy is mostly flat right now, but some of Fed officials are hinting that they'd support rate cuts if unemployment were to continue to rise. And so all eyes, like I said earlier, are going to be on next week's jobs data. And on the housing front, new home sales were strong, but builder confidence is still a little shaky just due to uncertainty around interest rates as well as tariffs. Price cuts are increasing. I saw a stat nearly 34% of homes on the market last month had a reduction, which is a growing trend compared to the past few years. And please reach out before cutting price. We have a solution for you and your sellers just to make sure you net the most possible. As for those tariffs, things are starting to sound a little less heated. President Trump said he's working on new deals and that tariffs on China will come down substantially. And China is reportedly considering lowering their own tariff. That positivity basically helped mortgage pricing improve this week. But looking ahead, next week is packed with potential market movers. Like I mentioned, I'll be back with PCE. That's the Fed's favorite measure of inflation, and that's going to come out on Friday. We'll also know if Q1 GDP shows, whether growth stalled or has gone negative. And we'll get labor market news from both ADP as well as the BLS, which could pressure the Fed to act if unemployment is rising. A weird thing to cross your fingers for. But bottom line, we're seeing more signs of a slowdown. And if that continues, we could see rates improve later this year. But in the meantime, expect more market swings as headlines and, this data that we're seeing keeps driving volatility. See you next week.